QuickBooks Pro Plus Desktop 2022 OneNote presentation. Populate invoice using billable item that was created from a PO or purchase order. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introduction 8130, populate invoice using billable item that was created from PO tab. Also take a look at the immersive reader tool, topic introductions in the text area too, same name, same number, but with transcripts. Transcripts that can be translated into multiple languages and either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, we're starting off with a screenshot of the home page. In prior presentations, we entered a purchase order, which is a request for inventory to the vendor, but doesn't have a transaction related to it. We actually populated the customer into that form, not because the vendor needs it, but because we wanted to track the customer as we got this inventory formulation going through the process. Then we entered a bill, increasing the accounts receivable, other side increasing the inventory, and we still used this, or we created the bill from the purchase order and pulled over that customer information, which again isn't really needed for the bill itself, but that allows us to now turn around and create the invoice and pull over that billable item that we pulled in from the bill, which was pulled in from the purchase order, which is where we're at this time. The impact on the accounts will be the same as any invoice. The new thing is that we're basically tacking it on or tying it to the bill that was tied to the purchase order. So the accounts receivable is going to go up because it's an invoice that's going to be created. Sales is going to go up. And then the sales tax payable is going to go up. Inventory is going to go down. Cost of goods sold, which you can't quite see right here, is going to go up. And we're also going to have the subledger for the accounts receivable broken out by customer impacted and the subledger for inventory broken out by unit impacted. We're now in the vendor center and the transactions area. We're looking at all of the purchase orders, and this vendor one, which was our new vendor in a prior presentation, is the one that we're picking up here. We use that purchase order in order to create. Here is the purchase order. We had the purchase order. It's been received in full, as you can see here, and we used it to create and populate our bill. So back to the vendor center, now looking at the bills, and we're looking at the open bills this time, and this is going to be the bill of the for vendor. So there we have that. There is our bill. You can see that the customer has been pulled through. Once again, it's a billable item, which now can be used to pull into the invoice. So now we're making an invoice, turning around to the sales cycle side of things. So we got the new music stuff. That's the customer. QuickBooks says, and I'm paraphrasing here, hey, we've got this stuff that came through from the billable item. Do you want to add that? And we're going to say, yes, we do. And then we're going to tick this thing off, which is in the items tab on the right-hand side. That populates our invoice for us, pulling it over from the bill. And it does so pulling over the sales price, not just the cost, because we used an item to pull it over, which is nice. So what's this going to do? Well, now it's just a standard invoice. So it's going to be increase the accounts receivable by the full amount, the 5124. It's going to increase the revenue, not including the sales tax, by the 4880, the difference of the sales tax payable liability account 244. It's also going to decrease inventory by an amount not on the invoice, but known by the system because of the items being used, and cost of goods sold will increase. There will also be an impact on accounts receivable for the customer of new music stuff for the subledger, and there will be an impact of the subledger reports for inventory by unit, 20 units as well impacted. So here we have it. We got the accounts receivable has gone up. The other side going to sales down here. Sales has gone up. And then we also know that the difference between the two is going to go to the sales tax payable, which is here. And then the inventory went down. And then the cost of goods sold went up. So if we look at the customer balance detail, this is the invoice that has been put on there. If we have the total of the customer balance detail, this would be tying out to the accounts receivable on the trial balance or balance sheet. And here's the inventory valuation summary, breaking out the information by unit as well as cost. And once again, the cost would be something that would be tied out to the balance sheet or trial balance. If we just look at the transactions in terms of journal entries, it would be just a standard journal entry for an invoice, although those are somewhat complex. We're going to say that the invoice journal entry would be an increase to sales, so the 4880 with a credit. Sales tax is 5% of that, so the 4880 times 0.05 or 5%, 244. Credit to sales tax payable, and that means we're going to be collecting accounts receivable going up by the 5124. We also have the inventory and cost of goods sold that's going to be pulled in from the cost information from our subledger. Inventory going down by the 3360, cost of goods sold going up by the 3360, debits and credits here. And this top portion would basically be populated on the invoice, as we saw. This bottom portion not populated on the invoice, but driven by it as we record the transaction. So that means the accounts receivable is going to go up. We're looking at the current month and the year-to-date numbers. It's going to have the same impact and the same totals for the accounts receivable because it's a balance sheet account. Same with inventory. Inventory going down, but same impact on February and year-to-date numbers because balance sheet number. And then we've got the sales tax payable, which is going up. Same impact on the current month and year-to-date balance sheet number. And then sales on the current month of just February was at 4,294. It goes up in a credit direction of 4880 to 9174. And then the year-to-date number was at 51170. It goes up by the 4880 to the 56050. And then the cost of goods sold for the month of February was at 3432, goes up by 3360 to 6792. Year-to-date was at 40,674, goes up by the 3364 to the 4433. If we look at the net income for just the month of February was at the 516. It goes up by the 4880 minus the 3360. Net impact on the net income by the 1520 to the 2036. The year-to-date net income was at 7,943, goes up by 1520 to 9463. So the accounts receivable, you can see the GL was at 14. This is the year-to-date numbers. 687 goes up by the 5124 to the 19811. The accounts payable goes up to that 3360 by 3360. The sales was at the 46,876, goes up by the 2200 to the 4976. The cost of goods sold, 40,674, up by the 3360 to the 4434. And the inventory was at the 9626, goes down by the 3360 to the 6266. We're focusing here on the inventory at this point in time. We'd also have a subledger for cost of goods sold, but let's focus here on the inventory. We sold this unit, which is an SQ. That's one of the things we sold at least, and we had before 20 of them. We sold all 20 of them, it looks like, so they are down to 0. After adjusting our subledger, then if we were to add them all up, we get to the 6266 for all of our inventory units. That should match out basically what we've got on the general ledger. That's the same as the summary report, inventory summary report, in essence, what QuickBooks is doing when you enter and use items.